Let's move on to a small company that we've been talking about. This company got hit really hard by the tariffs, and we're talking about Apple. Used to be Apple Computer, no longer computer. Their symbol AAPL in the consumer electronics industry. Short on the float side is only 0.9%. A lot of people own this stock because the institutional ownership is only 63%. So a lot of individual investors there. PE ratio 29.9 versus 30.5. Price to sales also expensive, 7.3 versus 4.8. Price to book value 42.3 versus 16.3. And then price to cash flow, again, keep it in line, 26.6 versus 23.8, very expensive. Now, the PEG ratio does look, I'll say okay. It's 2.3 versus 27 for the industry. We see the earnings per share over the last year, and we've talked about this multiple times over the past year on our show. Earnings per share for the past year are down 2%. Now, that's better than the industry decline of 5%, but still, you're paying such a high multiple for declining earnings. Sales, nothing great here. Sales for last year were up 3.7%. Industry up 0.8. Now the analysts, and I think everybody they hear the name Apple, they feel good about it, but they say 5-year earnings per share growth estimate is 13%. That's not much better than the industry at 12.4. They do pay a dividend, 0.5%, use about 16% of the earnings to pay that out. We also do see on the balance sheet, current ratio 0.9 versus 1, so not a lot of liquidity. I know there's a time years ago, they had a lot of cash on the balance sheet. Looks like that is all gone. Debt to equity was also low, but not any longer. It's 1.5. Net profit margin, still very good, which this is the problem. With the tariffs, this can change dramatically. 24.3 versus 16.2. And then return on equity, this is just crazy, 144. And return on invested capital, 58.8. But let's see what the analysts say going forward. What do you got, Chase?
Yeah, so current price here for Apple, again, their ticker symbol is AAPL. It's $188.38. They were down 7.29% on Friday. I mean, I know they got hit very hard on Thursday. You said
7.2% down one day?
Mm-hmm. Wow. And I think on Thursday they were down about 9% as well. And I'm trying to go off memory here, but I'm pretty sure they had a pretty substantial fall there on Thursday. I believe it was worse than it was even on Friday. 52-week range, though, for Apple, it's $164.08 is the low. The high is $260.10. I think the problem here with Apple is people, they just pile into it because they love it. I mean, the 10-year return is up 539%. So you can't deny. I mean, it's been a great compounder for people. But the issue is I don't think the next 10 years you're going to see a 500+% return. I just see that as very unlikely. Looking forward, based off the valuations, I mean, it's still expensive. I mean, you go out to September 2026 now, I see estimated earnings per share here of $8.19. That gives a target sell price of $135.95. I mean, Apple's still trading for about 24-ish times those future earnings. It's pricey, and the growth there is not what it used to be. And I still believe, I mean, you're looking for 8% earnings growth this year from analysts, 12% next year. I'm speculating here. I think that is aggressive. I don't think they get to those earnings growth. I was looking at, my wife's iPhone and my iPhone, and hers, I think mine is the newer one. And I can't tell the difference. I'm like, what the heck? Yeah. It's the same phone. I think the innovation is gone. There's all the excitement over AI. That's dissipated. They're delaying the AI rollout, and I just don't think they have it there. And the big concern here is the tariffs. And this is a huge concern. I didn't realize it was this bad. If I was an Apple shareholder, I'd be very, very nervous. Shares of the iPhone maker, again, slid terribly on Friday on China's retaliatory duties against the U.S. China makes up for about 80% of Apple's production capacity, with about 90% of iPhones assembled in the country. I mean,
90% assembled in China?
Yep.
Ooh, wow.
I mean, that is a very hefty tariff for this company that could be coming into play. Not to mention the counteractions from China. Those retaliatory tariffs, I think, are just the beginning. You think they're going to want their citizens buying iPhones when Huawei is making a comeback? I would be very, very nervous with China's response to allowing iPhones in that country to the capacity that they have.
Yeah, and I think the problem with Apple is that people, they just look in the rearview mirror like, oh, we made all this money. No, it's a great company. Yeah, it's a great company, but it's highly priced. They got some major headwinds, and I think a lot of people wrongly expected that, oh, Trump would give them a pass. And he is so tough this time, and I knew he's going to be tough this time because he said it. He said, "Yeah, I'm not going to give any, forgiveness
Exemptions, yeah.
exemptions." So, and I think that's why,
Especially to a country that allows 90% of the iPhone to be assembled somewhere else.
And Apple did say they're going to build a factory here for $500 billion. It'll take at least 2 years to build that factory. So it's not going to be over tomorrow. And I think Apple investors are going to get a little bit nervous. And I think the stock could have more to fall, especially if they do, and come up with more tariffs.